Shifting our focus to markets now, a cautious mood in Indian markets is back, with benchmark stocks marking a second straight weekly loss after hitting all-time highs. The rupee crashed to a record low for the second straight session on Friday. While stocks have rebounded, the rupee continues to take a hit, and the ongoing rout risks a vicious cycle. Sentiment remains shaky due to foreign outflows from domestic stocks and the delay in a US trade pact. The rupee breached the 90.5 per dollar mark for the first time on Friday, extending the rout from the previous session when the currency crashed to a record low. The rupee weakness has set the tone for broader market anxiety. Without a trade deal with Washington, Indian exports face a stiff 50% tariff. India's goods trade deficit hit an all-time high in October, with imports surging and exports taking a hit from tariffs. However, trade talks between the US and India have gained fresh momentum in recent months. Official negotiations followed a phone call between Prime Minister Narendra Modi and President Donald Trump. It reinforced that optimism. However, any sort of a trade deal still remains elusive, with both sides touting solid progress in talks. The rupee has also weakened because of the continued outflow of foreign capital from domestic stocks. Foreign investors remain net sellers, with outflows totaling $18 billion from the Indian stock market this year. The currency has fallen about 6% so far this year. That makes the rupee the worst performing Asian currency of 2025. Currency traders say the latest drag is the outflow from both stocks and bonds. They state that each renewed drop in the rupee makes global investors less keen to buy Indian assets. India's opposition political party, the Congress, has targeted the government for the rupee's repeated record lows this year. Last week, Congress Chief Mallikarjun Kharge alleged that the currency was weakening because of the government's policies. He said, and I quote, "If the government's policy was good, the value of the rupee would increase." While political leaders have been at loggerheads on the rupee's decline, the Reserve Bank of India's Governor Sanjay Malhotra and Chief Economic Advisor V. Anantha Nageswaran have said that they are comfortable with the current moves in the currency. In fact, Nageswaran said that he was not losing sleep over the fall in the value of the rupee. And the reason is that it was not impacting inflation or exports. The RBI, for its part, has stepped in to ease any sharp sell-off in the currency. But under the new governor, the central bank has stepped off the gas on intervention.